Good morning and welcome to the Morning Market Review. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM. Today is the 2nd of February and I'd like to welcome you to this live stream. Let's just go straight through to our disclaimers. Okay, here's the high risk investment warning. Good morning, Kim. It is an absolute pleasure to have you on the webinar as always. Hello, Raj. Welcome. Thank you everyone for joining this morning. I'm just going to keep this high risk investment warning on for a few moments longer. I've got to change this, the color of this this address here. That's www.fxcm.com/au. Should be sort of a richer blue. Can you guys hear me? Kim saying there's no sound, no picture. Can you guys hear me and see the picture? Just if you can confirm for me. Should be okay. I don't see anything. Hey Katie, good morning. Can you see the picture? Can you hear me? Okay. Let me just type something here to Kim. Okay, cool. Let's just bring up the market commentaries disclaimer. I'll keep this on screen for a few moments as well. Okay, cool. And let's start off with the real rate. Let's go ahead and share that tab. Before we do the real rate, what we have to mention. Hey, Anna. So let me try and join a couple of webinars later or during next week and see if I can replicate what's going on. But I think that you kind of refresh, press play. It should be running after that. Let me see if I can replicate. I just want to mention, guys. Today is non-farm employment. It's at 3:30 p.m. ZA, which is 1:30 p.m. GMT, right? Always remember there's going to be heightened volatility around the non-farm payroll. So just be careful of that. Non-farm employment change expected to be round about, it's just shy of 190,000. And just keep an eye on those average hourly earnings, which are forecast at 0.3% month on month. So we have to mention that. A few other things just before we get into the analysis, and if we can, we'll take a look at Meta and Amazon and Apple. They came out with results. Meta actually has announced its first dividend. That's big. Okay, that's dividends are, signs of companies that are they're not retaining earnings anymore. They've reached sort of a critical mass where they can distribute earnings. It's a sign of strength. Markets like to see companies that are paying out stable dividends, and I think that that's something worth noting. Amazon had good results. Apple not so much. Apple did beat expectations, but their Chinese business seems to be under some pressure. So that's just worth mentioning. We'll see if we can do some of that. Kim, are you back online? Just want to double check. Kim, you back online? Just let me know if you're back online, or send. I was going to say, or send me an email, but if you're not online, you won't hear me say that. Just let me know if you're back online there, Kim. All right, let's take a look at. Okay, cool. Okay, cool. KD wants to do Nasdaq. Yeah. Let's do some Nasdaq. Let's just start off with the real rate. Let's start off with the real rate. So again, I'm taking a look at the price action for potentially what we call a reference candle reversal. A reference candle reversal is effectively a pattern. There's a simple pattern or the complex pattern. This looks like a simple pattern. The simple pattern takes place over 3 bars, 3 candles. You typically have a candle that has the highest high in at least the 3 candles. That's this guy here. And then it closes below. Let's just put a little close there. Closes below the reference candle slow. What's the big deal about these reference candle reversals? All swings, listen to this, very important. All swings start with reference candles. Now, I wish it were that easy. Not all reference candles lead to swings. Sometimes they just happen and we carry on having sideways movement. But if there's going to be a swing, there has to be a reference candle. So the fact is, if we get a reference candle reversal here, then there may be a swing. And it will be a swing to the downside, right? A swing to the downside. And I think that makes sense. I think it makes a certain amount of sense because there is, in my opinion, scope for lower yields for 2024. Yes, there was pushback on Wednesday by the Federal Reserve, pushing back from March to, say, May. I'm not sure that's a big deal. I think ultimately we do see the rates come down. And you can already see a clue here. The RSI is breaking below this upsloping trend line. It's breaking below this upslope. So that's it's not a primary signal, it's a secondary signal when the RSI gives these breakouts, or breakdowns. But if we carry on seeing the breakdown in the RSI, we should get the real rate following. What's the big deal? We addressed this yesterday. Is that the US dollar tends to have quite a robust movement, with positive movement, with the or correlation relationship with the real rate. So if the real rate comes down, I think a US dollar will be under pressure. If US dollar is under pressure, then the other majors potentially are supported. So that gives us some clue as terms of traders. Let's just take a look, see what's happening with the US dollar. Before I wanted to take a look at DAX after this. The reference candle is definitely more valid on the higher time frames. Higher time frames dominate. So what you want to do, that's why we do top-down analysis. Higher time frames dominate. Yeah, absolutely, Raj. Let's just take a look at the US dollar underneath this, just because there is a sort of a divergence between what's happening with the real rate and the US dollar, or there was yesterday. But we suggested that the US dollar potentially catches up. Let's just see what's happening there. So I'm just going to click on this plus button here and click US dollar. Okay, let's just bring it in underneath. Okay, well, that's interesting. We've got a red candle here. Let's just go through to the daily chart. And you can see how the dollar kind of hit a high yesterday before reversing and pushing down. Hey, that's exactly what we hypothesized. How much more sort of room does this have to move? Well, I think that as long as the correlation holds and we get this reference candle reversal, the potential for dollar pressure here is on, right? And what we can do is perhaps just measure this on a sort of top-down analysis, the US dollar. Before we do, let's just take a look at US dollar. Let's take a look at US dollar first. Okay, then we'll take a look at the risk assets and we'll look at DAX and NASDAQ. Remember that we looked at this correlation coefficient yesterday, and we said that the dollar probably needs to catch up with what's happening on the real rate. That may be happening. Let's take a look at US dollar on a weekly time frame. So let me just bring that up. Okay, I'm going to share that screen and take a look. This is what we drew yesterday. So the 30-week exponential moving average acting as a resistance here. And I just drew this trend line in. It's not a valid trend line, but it's just perhaps a signal for us to see if there's some sort of breakdown, right? We need to see the RSI dip below 50. It's on 50 at the moment, so I don't think there's a big bullish drive here, but I don't think there's a big bearish push either. We need to see what happens with this RSI. What we can do, and this would be interesting, watch this. If we put in our trend line, let's put in a trend line now on the RSI. It does look as if there's sort of a breakdown in the momentum, right? It does look as if there's a breakdown in the momentum. Let's just make this a solid line. Because there's a break, but I would need to see it slip below 50. Let's take a look at US dollar on a zone analysis. So let's just bring up the zone analysis. Okay, and here you can see that it's now slipped from zone 1 into zone 2. Well, that's relative weakness. That's interesting. That's relative weakness. And we put in this resistance area, so that's still in force. And what we put in previously was the fact that there could be some sort of wedge pattern here, breaking down, something like this. So there's the wedge pattern, and we're seeing if there's a sort of a dead cat bounce here in the US dollar. Why would I say there's a dead cat bounce in the US dollar or a bear market rate? Because I'm trying to get a bead off of the direction of the real rate, and that real rate's been pulled down. Okay, so you can see now that the dollar is starting to. Well, if the dollar is starting to come down, then potentially some sort of support coming through for the other majors, right? So that's all very interesting for us to see. Now, let's just take a look at the hourly on the US dollar just to see in terms of timing what's happening on the hourly. And you can just see, we put in this red arrow yesterday, and it actually sort of played out pretty much as hypothesized. Okay, so that's quite encouraging to see. It's quite encouraging to see that yesterday's analysis did bear some fruit, didn't it? Another analysis that we looked at yesterday was DAX. I want to just revisit the DAX analysis. Again, top down, and then after DAX, we'll look at NASDAQ KD. So let's just do DAX first, just as some sort of debrief. Okay, so what we'll do is we'll take a look first at the weekly chart. And the weekly chart, I think, is looking really positive, isn't it? So what we have here is a reference candle reversal to the upside. And we've got a RSI trendline break to the upside at 0.1. We've got the EMA pointing up. Okay, it's moving in that northeasterly direction. And, of course, price on top of that EMA. So it's all looking positive. Okay, then the next step is we go down to our zones. Let's see what's happening with the DAX in terms of the zones. All right, so you can see we've got this expansion in the Bollinger Bands, but that expansion in the Bollinger Bands suggesting higher volatility. But that higher volatility is being combined with the DAX in zone 1, a bullish area between the upper red, upper blue. And we said that it was on the border of zone 1, zone 2. It's back in zone 1. Okay. And then we pointed out the RSI is above 50. So there was some sort of bullishness. So we suggested that there might be an opportunity here for a dip in the uptrend. Okay, a dip in the uptrend. So let's just bring up the hourly chart and just see how that played out. And let's move the camera here. It played out quite nicely. We got the bullish cross. We got the stochastic moving upwards into that upper quintile. Now, I don't know how long it's going to hold this upper quintile, right? I don't know how long it's going to hold the upper quintile, but I can tell you that if it holds the upper quintile, there's going to be bullish support, and potentially DAX still has some legs under it. So the crossover was yesterday. That was yesterday's live stream. Now what do? Well, now we have to move with the direction of the stochastic, and if the stochastic breaks down, then unfortunately the upwards momentum's breaking down. Then effectively the swing's over. So then we've missed it. It started yesterday. But the idea is that if it holds the upper quintile, there'll be legs there. And one of the catalysts here will be the non-farm payroll, just to see if there is a risk on, risk off movement. So just bear that in mind. That's where the volatility comes in. All right. Katie just asking for us to do NASDAQ. I think it's a good idea for us to do NASDAQ. Again, top-down analysis. So let's start off with the weekly chart. And let's go ahead, bring in NASDAQ 100 weekly. All right, so this is the weekly chart. And what do we have here? I think we have a really good-looking positive chart. We've got the NASDAQ above its 30-week exponential moving average. What direction is that 30-week exponential moving average? It's pointing up. Where's the RSI relative to 50? It's above 50. Is it overbought? No, it's not overbought. Okay, so we've got this nice-looking NASDAQ chart in terms of the weekly. Now, it's just worth mentioning that the NASDAQ is sensitive to rate movements. And we've been looking at the real rate, and we're suggesting that there is this reference candle reversal, a bearish reference candle reversal that's potentially charting on the real rate. Now, again, reference candles are important because if there's going to be a swing, they're always going to start with a reference candle. The problem is reference candles don't necessarily lead to a swing. That's the difficulty there. But if there is a reference candle reversal to the downside and it leads to a swing, well, the NASDAQ's going to be sensitive to that. And it tends to move opposite to the way interest rates move. So if the yield's coming down, we would expect the present value of NASDAQ to be supported. That's called the time value of money. There's a formula for that. We've done it many times in the past. We're not going to do it today, but perhaps we'll do it next week. The idea here is, well, if the NASDAQ is having such a positive weekly chart, can we synchronize that up with the daily chart? So let's go ahead and bring up NASDAQ 100 on the daily and see how we look in terms of our zones. And here we go. Let's just zoom in here. Okay, so you can see we're now back. We're back in zone 1. We're back in zone 1, back in our bullish area. What I would like to see is a signs of trend. And what are signs of trend? Well, signs of trend would be the bottom Bollinger moving upwards, but the top Bollinger would have to push up as well and start moving upwards. So I'd like the top to start moving upwards. Nevertheless, there is a daily reference candle here. Can you guys see it? Can you see the daily reference candle? It's over here. There is the lowest low in at least 3 candles, and then yesterday's candle closes above it, and we've got a higher low on either side of the reference candle. So that's potentially the start of a swing. It may not lead to a swing, but if there is going to be a swing, we've now got the reference candle locked in. Okay, there is a bit of red here. Well, that's actually quite interesting, because if there's a bit of red, maybe there's a dip in the uptrend here that we can exploit. Let's go down to the hourly chart and see if that is the case. So we go down to the hourly chart now and look for the technical signals on the hourly. Let's just bring up the Nasdaq 100 there. Okay. What we have is a situation very much like DAX. The signal took place yesterday. Okay. And I think a large part of the signal in the Nasdaq came from Amazon, came from Meta. And that's probably sort of more inherent in that candle there, sort of after hours release. Nevertheless, you can see that the Nasdaq is in the upper quintile. It's in above 80. The longer we hold that upper quintile, the more support there's going to be for Nasdaq. So one thing just to keep an eye on is angle and separation in the EMA. So if the EMAs develop an angle and separation, KD, and they move to the upside, I'm just trying to grab an arrow there. Yeah, there we go. That's kind of what we would be looking for. Does that explanation help, KD? Does anyone have any questions around that? Please type those in. Okay. Any other instruments? I'm going to stop over here unless there's any other instruments that you guys want to take a look at. I want to just reiterate. Non-farm payroll today. Okay, it's at 3:30 ZA, 1:30 GMT. All right. Hopefully softer jobs numbers to support our analysis. Not too soft, Raj. Yes. We don't want an all-out collapse here, right? Remember, soft landing versus hard landing. What we'll do is we'll talk about it on Monday. Right now, Raj, I feel we've got this kind of Goldilocks type of economy where growth is good. Job markets is not outright collapsing. Inflation coming down beautifully. It looks really interesting. All right, guys, let's wrap up here. Again, if you found this useful, it would be highly appreciated if you go ahead and click on that rocket ship, that boost button. It just helps with the dissemination of the live stream. All right, guys, have a fantastic day ahead, fantastic weekend ahead. Catch you guys on Monday. Thanks very much.